please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC-TV18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm LOTTA Venkatesh, and with me are Anuj and Sonia. Well, shut down is the word that's perhaps dominating mind space. But really, look at the way the Asian markets have kind of responded to it. It's a minor event. 0.1 and even Dow futures are down just 0.1%. So it looks like the global markets know this game is played with some regularity. The last time it got played was in 2013. And the big boys come back to the table after a bit of arguments. So it looks like the markets, at least today, will not get taken in. And in any case, we have plenty of reasons to ignore this. So much of good news over the weekend. Very strong earnings. I mean, it's not just that Relgio becomes profitable and that's the big boy Reliance numbers, but Jubilant. Selling more pizzas is not just jubilation only for Jubilant. It also means that demand appears to have picked up. And then that massive HPCL ONGC deal also means that there are fewer worries on the macros. I mean, you may argue that this is not classical divestment going to the market, but nevertheless, it's important that the government will meet its targets. So whether you look at macros or whether you look at earnings, I think we have a good thing going over here. I think now we will be looking at what, 11,000 and 36,000?
Yes, it seems like it's just a matter of time before those levels creep in, right? Morning, Lata. Morning, Anuj. So, given that earnings have picked up quite a bit, at least the trends are positive. Are we looking at 11,000 this week itself?
Yeah. Morning, Sonia. You know, this was expected that earnings this time will be good because of base effect, both quarter on quarter and year on year. But, you know, even then the markets should be cheerful because earnings are beating even the estimates, right? Estimates will factor in the QOQ and year-on-year base effect. But I think Jubilant's earnings really, we were discussing it on Friday that maybe you could expect another gap up today morning. You know, Lata spoke about 11,000. The number doing the round in the market is the Nelson 11,111. 5 times 1 is the number that, you know, a lot of people think.
We have to stand on one foot.
I don't know. I mean, anyway, my one leg is broken, so.
But what's the number after that? 4 times 9?
No,
That's what people are talking about as well,
No,
right?
but look, this is a market where all engines are firing, banks doing well. And, you know, the big story was the banks doing well, IT is doing well, and old economy heavyweights like ITC, Larsen, Reliance, all of them are firing. So the momentum is with the bulls, and generally in expiry week, you expect momentum to continue. And as we discussed ad nauseum last week, for me, the big story last week was the breakout of the bank Nifty after staying, you know, sideways for 4 or 5 months. Look at last week, and it's significant last week. Last week was a momentous week. The Sensex was up 2.7%, the Bank Nifty was up 4.5%, and let us not forget that mid-cap index last week was down. It was down about 1.7%. Last week, in fact, we went through a period where index looked good, but a lot of portfolios were actually in the red. And that actually was a bit of a healthy sign for the market in the sense that, you know, you needed some mid-cap correction, Sonia. And my sense is that there's one more large cap up move which is left, which is possible this week. After that, mid-caps again will play catch-up with the large caps. No, I mean, this is not a market in which, you know, you want to be cute and, you know, you want to be on the short side. Maybe intraday sometimes you can, but the larger trade is just on the upside. I mean, that's phenomenal, this market. And I think once again, you would look at stocks or companies where earnings should beat estimates. I think that really is the key theme now. You saw that with NIIT Tech as well on Friday, and of course Jubilant. So that clearly is the theme now.
Actually, and just to add 2 more stocks, HDFC Life doing so well, so much better. Blockbuster numbers is actually good news for HDFC, which is such a big heavyweight in the index, as well Axis Bank. You know, like Yes Bank, these are 2 stocks that have already seen the RBI divergence. So, you know, the numbers will not have that kind of ambushes, is my guess. So, again, these 2, there is nothing that will break the Nifty's momentum or mojo right now. Maybe by the time ICICI comes, yes, there could be, because there the divergent story is not yet over.
Yes, and we must mention that there's been buying both by FIIs and DIIs. In fact, there was almost 1,000 crores of buying that we saw by FIIs, and a lot of this chunk has come into the financial space. So we saw almost 350 crores of delivery buying in names like ICICI Bank, etc. Seems like we're headed for an interesting week ahead. Let's take a look at what our wise experts have to say as we head into trade this Monday morning. Neelkant Mishra of Credit Suisse says elevated real bond yields and are at a record term premium suggests the market is worried about inflation as well as fiscal slippage. Once the near-term volatility passes, Credit Suisse expects bond yields to fall, which is positive for PSU banks. For NBFC stocks, Neil Kant says he has different concerns.
Okay. Well, speaking about that, one should worry also about the US yields. They are at 2.66 and 2.63. A lot of people thought the resistance will be seen. We need to find out how that will play out, if that is going to be a problem at all. But that discussion later, we are going to have a guest on that. For the moment, Indian money market views. Pramit Brahmat of Veracity says the rupee will take cues from positive dollar index and thus will depreciate. He sees the trading range for the spot USD INR at 63.80. 64.20. That's neither here nor there. I think the bond markets are more important. Ajay Manglunia of Edelweiss says the bond markets continue to suffer from weak demand even after the strong rally seen last week on the trimming of the incremental borrowing. The cutoff yield for the 10-year bond auction was markedly higher, and this will serve as a dampener. He says the 10-year yield is likely to trade in a range of 7.27, 7.33 today, and that also ties in with the higher US yields, and it also ties in with Neil Kant being worried about NBFCs. I mean, higher yield would mean higher cost of money for NBFCs. Oh.
Okay, well, let's talk about the global markets then. Here's Nigel with the world view.
Well, the Dow futures are indicating that it could be a tepid start whenever the US markets do open up. It's indicating a 30-point downtake. The Asian markets as well, they're trading more or less with a bit of a negative bias. The Kospi is a relative underperformer. That's sitting with a cut of close to around 1%. But in Friday's trade, the US markets, they in fact brushed aside any kind of the government closure fears. And in fact, we did see that all those markets, they ended in the green. Remember, the Dow, they had a couple of big losers. IBM was under some pressure, American Express as well under some pressure on the back of company-related issues. But in spite of that, the Dow ended in the green. Well, the yields you were just talking about, that's a bit of a worry. It's hit the highest levels we've seen since 2014. So keep an eye out on that factor. The reports are indicating over the weekend that the Republicans, they're ready to come to the table. They have a temporary solution in place. But the Democrats, they're saying that, in fact, we should get, the immigration agreement in place. Only then we'll come to the table. The European markets, well, they ended well in the green. All the three frontliners, they ended in the green. We had some economic data coming out of the Eurozone. It indicated a current account surplus, and that looked quite good. Remember, besides the US government shutdown, the couple of big cues that we have this week are central banks. Bank of Japan meets starting today for the next 2 days, and the ECB meet starts off on Thursday. So keep an eye on that front. Finally, the SGX Nifty is saying, so what? US government is shut down, we are open, and in fact, it's indicating as flat as can be a start. Back to you.
Thanks a lot for that, Nigel. And that's exactly the cue that we're going to take forward. The US market shutdown, as well as the rise in yields, the US 10-year yields, both could be something the world may have to take note of. James Glassman, senior economist at JP Morgan, joins us on the phone line. Thank you very much, James, for staying up for us on a Sunday evening. Well, first the shutdown. The Asian markets have not responded very negatively to it. Dow futures is lower by just 0.1%. Will the market be able to take this shutdown in its stride?
I think so, and we saw that last week. These kinds of events are mostly political theater. Much of the government still runs because much of it is on automatic pilot. This shutdown affects the discretionary components of the government. And the truth is, when we look at the past and we see moments in the past when these kinds of things happen, they really have very limited impact on the economy. And the truth is, the reason is because once an agreement is put together, anybody who was not on the job is paid retroactively. So we never see much of an impact on the economy. I think people in the markets must expect that this is going to be resolved one way or the other in the next week or so.
Okay, that's interesting, James. You called it political theatre. Very well put. Good morning from India. The raising of the debt ceiling has been a problem for years. And this time around, the expectation is that if they don't get the borrowing authority to raise the debt ceiling, then that could lead to some more defaults, etc. Would that be a worry for you?
It creates volatility, and we've gone through this several times before. I don't think we worry about defaults. I think that's highly unlikely. I mean, the Treasury Department does have options that they can work through to get past this, but the deadline is approaching, and I think as in the past, we will see they will find a way to resolve this because it makes no sense. And I don't think anybody in the position of responsibility is going to be allowing the government to be defaulting. It would be a big mistake. And I just think it gets caught up in all these deadlines. I think we will find short-term solutions until they can come up with a longer-term solution.
Okay. Well, James, before I get to that, I just want to know how seriously we should take the rise in U.S. bond yields to 2.66. Will this at some point, begin to slow down the rally in at least emerging markets?
I think what we're watching is a response to the improving outlook, not only in the U.S., but all around the world, frankly. We and my colleagues keep marking up our growth forecast, so it's a natural outcome that as we see a stronger economy, we're getting tax changes here in the U.S. that are boosting a lot of this optimism. And it's only natural that you would see bond yields rising. I think for many of us, we don't view 10-year Treasury yields of 260 as all that onerous. If anything, we tend to look at interest rates as being on the somewhat on the low side because of what central banks have been doing. So I think what we're seeing is a gradual response to improving economy, which means the market has to start thinking about central banks pulling back from all this asset buying that they were doing. So I think, to me, rising bond yields in this kind of environment are a sign of strength, not something to worry about.
All right, James, we leave it at that. Thanks so much for joining us and giving us your quick take. That's JP Morgan saying that they're not worried at all about the US government shutdown's impact on financial markets. That's going to be very, very limited, and debt defaults also are not a concern for them. Watching Bazaar Morning Call. This week we are inward focused because we have plenty of stocks in our own markets to talk about. Not so much worried about global cues. So let's start off with that. Our entire team is here to give you the list of top 10 stocks for the day. Lots of result reactions. Jubilant Foodworks, great earnings. But Anuj, what are you looking at this morning?
Yeah, so Jubilant should be our stock of the day, but let's discuss some other stocks. Two financials, Sonia, one large cap, one mid cap. Kotak Mahindra Bank, big delivery buying on Friday, and the stock is about 5% off its highs while the bank nifty is there. So that's one stock which should be on your radar. The other one is JM Financial, and for me the big question is the NBFC correction over? You saw strong delivery buying on Friday, and the stock saw a big bounce from the 20-day moving average on the daily charts. Bull market stocks which correct and bounce back from 20 DMA normally go on to make new highs. So that will be interesting to track as well.
I guess NBFC as a sector cannot be the flagship, but there will always be the odd NBFC which will perhaps surprise us. But Varinder, I think all eyes are going to be on this deal, the ONGC purchase of HPCL 51%. Impact on stocks?
Well, clearly, please remember there will be no open offer. There will be no delisting of HPCL. This is the off-market transaction, so you will not see any block deal happening at that 473 price on the exchange. Who wins? Clearly, the government is winning because of the fiscal deficit, divestment targets much ahead of what they were expecting, and the bond yields will increase today. ONGC shareholders clearly win with this. So even if ONGC goes ahead and take the entire loan of that 37,000 crores with the interest rate of nearly 8%, the FY19 expected EPS will increase by 5 to 6%. Some of the brokerages are even penciling it down 8 to 9%. Most importantly, there is no value leakage which is happening, because in earlier there were reports that the premium could be 60, 70% or any abnormal price. This premium is a bit lower than what Street was expecting, so there's no value leakage which is happening in, and no open offer and everything. Well, the HPCL bulls may be disappointed today because there is no open offer, and the premium, remember when the deal came first or the announcement came first, the stock price was around that 470, 480 mark. What ahead? Apart from these stocks, also watch out for MRPL, because I remember Mr. Surana telling us that when this deal happens, there is a likely chance that HPCL MRPL merger will also happen. Also for me, very important is that how will ONGC fund this? Till now, the point is that they may take the entire debt because they've taken enabling resolution, but there are also chances, or whether they go ahead and sell their stake in IOC or GAIL. If they don't sell stake in IOC or GAIL, you may see relief really coming in both these stocks, because remember, GAIL has been falling since last 2 or 3 days, so that if the no OFS is coming, no stake sale, there could be partial buying happening in both these stocks. And of course, you will see IOC and Oil India deal for sure next year, FY19. With this, one with LTCG, because one thing what has saved government in FY18 is divestment of that 92,000 crores target of what 72,000 crores. So that is big takeaway.
And they are not going to get 30,000 crores in LTCG, or at least there's no guarantee that they will. Point taken. The other big story over the weekend, because it came after market hours on Friday, were the Reliance numbers. Naveen?
So Lata, only one word for the numbers. It's for the company will be Jio. Basically, if you see beat on almost all parameters, that is Petchem EBIT margins as well as Jio. So Petchem EBIT margins came in at close to 17.1% versus the highest expectation on the street was close to 16.1. This led to the overall EBITDA margins coming in at 17.6% versus 17%. Remember, the expected was close to 16.2. That is one beat. The other key highlight being that the Jio posted a profit of close to 504 crore versus 272 crore loss on a quarter-on-quarter basis. Both these things led to the overall consolidated PAT coming 16.2% jump of around 9,400 crore. On the back of this, brokerages seems to be upbeat. JP Morgan has a target price of 1,150 and they have a buy rating. Meanwhile, Morgan Stanley has an overweighting rate on the stock. I expect the stock to be in green in today's trade.
Okay, Naveen, thanks a lot for that. Standard disclaimer, of course, flashing on the screen. Now, keep in mind, what will be interesting is to also track Bharti and Idea, because if Jio is reporting these kind of numbers, then clearly telecom as a sector will also be something interesting. But stock of the morning, it already was the stock of the day on Friday, but could well again be Jubilant Foodworks. Mangala?
Right, Anuj, so the numbers were for all to see. The one thing that really stood out was the same-store sales growth number. The answer to that question was defined by the management in the earnings call, where they said that this same-store sales growth was actually led by frequency of orders rather than just the price change. So more people ordering more pizzas is a positive for Jubilant Food. Before going into the numbers, the company's consensus EPS for next year was 30 rupees, and they posted a 10 rupees EPS in this quarter. So continuing with that run rate, most of these brokerages upgraded their EPS estimates anywhere between 15 to 28%, and now the consensus EPS for next year stands at 41 to 42 rupees. This compares with 30 rupees. The big story, though, however, is the last bear, Kotak. They've upgraded the stock from sell to buy. They are admitting on print on their report that they were wrong, and they've increased their target price from 1,400 to 2,500 rupees. That is actually, something we need to keep an eye out on, because at 800 there were no buyers, at 2,000 there are no sellers. So a lot of expectations baked into the pizza. Let's see whether the company can deliver it or not.
Okay, Mangalam, thanks a lot for that. A lot of positives this time. Even Dunkin Donuts losses have halved, and our personal favorite is the fact that they've started delivering pizza now between 10 p.m. and 3 a.m. also, so they are increasing their timings as well, which is a great
one and a half year back when Ajay Kaul had quit, and the market that day was despondent. From the low point, the stock had rallied 6 or 7% and had the highest delivery buying. Stock was 600, 650 that day, and just change of management, fresh thinking, fresh strategy, and just and look at what the stock has done ever since that point. Two and a half bagger, more than that.
And 58 times earnings.
58 times earnings, but it's always been an expensive stock. But Varinder, good numbers from JP Associates as well.
Well, Anuj, I will not hesitate to say that these are really strong numbers, a super turnaround which we have seen in this company. You can't compare these numbers Y-on-Y because they sold the cement division in the base quarter. So you got to compare quarter on quarter. Why these numbers are very strong? Because I remember, when they sold the cement division, we all were grappling with that what now is left with the company. Now what will the business will be? There's nothing in the company. They've sold all the assets of the company. And see these numbers on a quarter-on-quarter basis. The income is up 32%, EBITDA is up 260%, margins at 12.7%. The interest cost is now falling from 900 crores to 200 crores Y-on-Y. The construction hotel segment, they have turned into profitable business. And the two most important segments, which is the cement, where the sales is up 26%, EBITDA is up 113%, margins improving, and the real estate sales are up 63%. So even after they have sold, a lot of assets, repaid debt, which is important, the remaining assets are kicking in and giving them numbers. Also important is that the stock is down from 30 rupees to 20 rupees, so it is not trading at that fresh 52-week high. It is 50% down from 52-week high. Strong numbers, as per me.
Okay, and I think the postal ballot has also come through, so looks like there will be a relief rally even on that count. Okay, Naveen, over to you. Wipro numbers?
clearly lackluster, Lata. If you see the revenue growth on the dollar revenue basis, it's been flat as 0% growth, and the revenues have come in at $2,013 million. Remember, the guidance was between 0 to 2% revenue growth, so this is at the lower end of the guidance. I don't think Straight will like it that much. On the other hand, the EBIT margins also are down. They came in at 14.8% versus 17.3%, but also factor in a $50 million provision that they have done for one of the clients who turned insolvent. Geographically also speaking, nothing great. Only Europe has grown almost 4.7%, but overall lackluster numbers. On the back of this, brokerages are not that gung-ho. They like Macquarie has a neutral rating on the stock with the target price which is lower than the current market price at 290. In fact, CS Credit Suisse also has a neutral target price of 270. Expect this.
All right, thanks for that. So choppy growth continues for Wipro, unimpressive there, but an impressive set of numbers came in fine. Not just that, HDFC Life delivered this time. Abhishek will tell us more. Abhishek?
Well, Sonia, unit-linked insurance products are the way that HDFC Life has shown the growth. Now, the 13th-month persistency rate has improved to 85.7 versus 80.7 on a YOY basis. So that's a very strong number in terms of your first-year insurance being persistent. Now, ULIP, that is the unit-linked insurance product, has improved to 59% versus 50% quarter-on-quarter. So that drove the AUM. The AUM has now increased by 26.5% to slightly more than 1 lakh crore. Gross premium grew by 20% on a YOY basis, largely led by first-year premium and the single premium, while net profit was up 15% on a YOY basis. Expect the stock to be in green. Group Finance, strong disbursement actually led to AUM growth. So disbursement on a YOY basis was up 37%. That drove the AUM by 18% on a YOY basis and about 3.5% on a sequential basis. So net profit was at 82 crores against an estimate of close to 77 crores, while asset quality remained under control with gross NPA at 0.73 versus 0.67 on a sequential basis. Expect Group Finance to be in green today.
Well, it's up 30% in 2 days, or nearly 25% in 2 days, Group Finance. So, just keep an eye on that as well.